Hello and welcome to a special episode of the Sharesify podcast. Today, we're delighted to be joined by Abby Glennie, manager of Aberdeen UK Smaller Companies Growth Trust. Abby, thanks for your time on a pretty hectic results day.
No, thank you for asking me to take part.
No worries. Now, can you explain a bit about how you and your co-manager Amanda whittle down the list of potential investments and maybe touch on the matrix, what it is and how it helps you select the best growth stocks?
Of course. So I think we really find that we actually have a broad investable universe when we look at the UK smaller companies. And increasingly, actually, we're seeing that we're buying new stocks into the portfolio that we perhaps never owned before. And one of the things that I think helps us to really narrow down that universe is the use of the matrix. So the matrix is our in-house stock screening tool. And we look at 12 factors within the matrix, which are focused around quality, growth, earnings momentum, and valuation characteristics. And it's a good way for us to narrow down that universe. So it's essentially showing to us stocks that it thinks are attractive and applicable for our type of investment process. Amanda and I are then using relationships we have with the sell side as well. So speaking to those analysts about the fundamentals of the business and importantly, looking at expectations in terms of forecasts. And we're also always meeting with the management teams as well to really dig down deeper into that fundamental analysis.
Yeah, that's great. I was going to touch on that. How vital are those meetings with management? Looking at the sort of whites of their eyes, finding out what their kind of motivations are. Can you just expand on that a bit for us?
I think for us, it is the most enjoyable and one of the most crucial parts of our job. And I think, we're really grateful for the access that we have to management teams. So we meet with all of our businesses twice a year. Often it's far more frequent than that, actually. We'll see them at conferences. We might go to a site visit. I think particularly when you're looking at a new investment case, it's really great to get to know that management team. And, I think sometimes we really come out with actually, quite a quick view, I guess, we formed of management team, of business, of outlook. It's really about asking the right questions, though. So I think the combination of being able to meet directly with management teams, but also combining that with the matrix, which is, independent in that way. So it doesn't know what those companies do. It doesn't know the management team. So it removes those behavioral biases. And I think the combination of those two is really vital.
Yeah, very interested looking at your latest fact sheet, Abby, and that's available on the Aberdeen website if anybody wants to take a look. Your overweight, now look at the list of the top 20 holdings. There's a very clear quality bias to these, but also very interestingly, you've got quite a big exposure to industrials. Could you just talk us through that?
Sure. So I guess two questions there. So maybe I'll take the quality first. So our process focuses around quality, growth, and momentum, but importantly with valuation considerations on all investment decisions. And we are overweight in quality. It's actually an area that we think we have room to actually step that down a little bit in terms of our relative positioning there. Similarly, if you look over recent periods, we've also sort of reduced the underweight in value a bit. And I think one of the things we've seen about markets recently is we're seeing actually the opportunity to own what are great quality growth businesses, but at very attractive valuations. And that's come from the sort of style rotations that we're seeing in markets in recent years. Industrials, you're right, is a big exposure for us. It is quite a big part of the benchmark as well. But when we look at that industrials exposure, there's quite a high dominance in there of UK infrastructure stocks. So around 10% of the portfolio will be in UK infrastructure. So those would be names like Balfour Beatty, Galliford Try, Renew, and Morgan Sindall. And it's a really interesting area because I think that's where we've seen a real evolution in terms of particularly the quality you talk about.
Yes.
I think if you look 10 years ago, they would absolutely have not fitted our type of investment process. And that was quite a troubled sector. I think now when we look at them, it's actually, I would say, one of the thriving areas when I look at UK domestic exposures. And there's really good end market spend there, particularly across areas like power and water. And these businesses have good balance sheets now, have good cash generation. But importantly, I think one of the things we like most about them is the order book visibility that they have going out for a number of years. And so there's a real resilience and visibility about that future growth. and their price, we think, still at very attractive levels, despite the fact that they've been a good area to be exposed to in terms of share prices.
Yeah. And another question is, the UK smaller cap end of the market is starting to attract more attention. I get this sense that I'm reading more and more people saying you've got to look at the UK. You've got to look at the UK market because it's cheap relatively, and small caps are on a discount to big caps as well. But how are you finding liquidity? Do you think liquidity is improving, or could it improve?
I think when we look at the history of UK small cap, there's always varied liquidity. And I think that will always be the case. So absolutely, these things are very attractively valued. So FTSE 100 has actually had, a good performance period. So I think FTSE 100 is around a 3 or 4% discount to its long run valuation now.
Right.
Whereas the mid cap space is over 20% discount. So there are reasons that FTSE 100 has performed well, but I think that discount is really quite wide now. Liquidity wise, what we find is that there will always be stocks which are more challenging to either get into or get out of. And that's no different to any time in history before. So I think there's probably more actually talk about the liquidity being more difficult, whereas actually what we find in terms of trading is it's quite similar to history. And I think one thing that's really important for us at Aberdeen is having a really great dealing team who have experience in small caps and are able to find us those pools of liquidity.
Who know where the liquidity is, absolutely. No, that's a real edge. That really is in the markets. James, I think you've got a couple more questions, and M&A as well.
M&A, just what your view is perhaps on the takeout prices we're seeing in the market, and then to sort of cap things off, maybe what you learned from legendary Harry Nimmo's, a bit of a legendary name in the small cap universe.
You'll be delighted that you say that. So maybe firstly M&A. We are seeing a pickup again in the number of bids for UK small cap companies. I think we've seen a lot over the last few years. I think for a period, actually, we saw them quite well spread in terms of not just small caps, but mid caps, large caps. I think recently, actually, we've seen a pickup in the sort of smaller cap space. It feels like the valuations that we look, we talked about the market, and if we look at a lot of individual companies, there is clear value in these businesses if you are able to take a longer term view on them. So some of these businesses might have more challenging short term periods, but one of the benefits for bidders is that particularly private equity owners are able and willing to take a longer term view, and often as well that they're able to invest in those businesses, but by raising leverage, which is tougher to do in listed space. So I think we'll continue to see a lot of bids while the UK market is at the valuation it is. I think it's really up to the sort of whether the boards are I guess how motivated they are to sell the business, and importantly, what is the attractive or the suitable level of pricing. And at the moment, we have seen quite a few sort of either bids or discussions, let's say, fall away, where pricing hasn't been acceptable enough for a board or shareholders. So I think, look, we're not all desperate sellers of these businesses here. I think that bid prices have to be at the right level that we would want to take them. And, we have lots of other opportunities. Like we said, we're seeing a lot of interesting stocks. So I think if we do see bids, that we think are suitable to accept, we have lots of new idea generation to recycle that capital back into. Oh, and sorry, you asked about Harry. How could I possibly forget?
Learnings from the legend.
Yeah. So I had the benefit of working with Harry for a number of years on the team and on the investment trust. I think there's lots of learnings. I think one would be, actually, you talked about management teams, the importance of engaging with management teams. I think also the flexibility that you need to have through cycles is important, and I think that's coming to mind right now as well. So we talk, and Harry will talk himself around markets are different now. So if we look at the sort of 2010 to 2020 decade, we had one stable macro environment really, and the same sort of style of stocks were generally in favor, and those stocks compounded returns and you ran your winners. I think we're now in an environment that cycles are shorter, there's more macro volatility. And I think one thing I learned from Harry, and Amanda and I are really trying to implement in the portfolio, is just the flexibility that quality growth momentum presents as an investment process. And we are always looking for those areas of improving earnings momentum that we don't think are priced into stocks, and those come in different sectors or different end markets through time.
Brilliant. Yeah, I mean, I actually had the pleasure back in the day of talking to Harry, and we used to have an earnings momentum product and a valuation product. So we had a great relationship back in the Stand Life days. That's wonderful. Lovely to see you. Thank you ever so much, Abby. And thanks for coming on the show. Thank you also to all our listeners and viewers. And we'll be back with you again soon for another special podcast. Take care.
Take care.